Hello and welcome back to Kitco Mining's Digging Deep, sponsored by Revival Gold, with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining and exploration space. Joining me today is Christopher Ecclestone, Principal and Mining Strategist at Hallgarten Company. Chris, welcome back to Kitco.
Welcome, thank you.
Now, you're in Argentina. We're going to be talking a little bit about Argentina in a moment, but first we have to talk about gold. Gold is at $2,900 per ounce. Its charge seems to know no limits. Why is that, do you think?
Well, I wouldn't say it knows no limits because it seems to have bumped into a bit of a ceiling at the moment. Why is it up? Gold supposedly reacts to international tensions, but we don't have any more international tensions than we had a month ago or 2 months ago. We've got the chaos of Trump. Gold supposedly responds to inflation, and inflation's sort of not gone, but it's sort of sitting there. So there's no reason to buy gold, any more reason to buy gold for inflation reasons now than there were 2 months ago. So I'd attribute it all to Trump. But Trump hasn't even mentioned gold. And I don't know, really. I think that the cheap seats are getting themselves all nervous. A lot of the talk about installing tariffs on gold is bizarre because it means that if you put a 25% on tariff on gold at $2,800, then gold for a US person or imported gold would be at $4,200 something an ounce, and in the rest of the world it would be 2,800 or 900. Why? Trump is not trying to get the gold price up. I don't think that that's one of his boxes he wants to tick or cares to tick, or even knows about. Trump ever looked at gold except for gold taps in the Trump Tower? I don't think he cares too much about it and where it goes. So, why? I don't know. And the dollar's been doing well. Why? Really? They say that the Chinese are buying it because they want to get out of dollars. Maybe they do, but apparently they've been wanting to get out of dollars for a long time. Hasn't gone to 2,900 before. So really, I think it's much ado about nothing, and that people should carefully consider whether they should take profits. Because if the motors behind this gold uplift go away, then gold could find itself in a bit of a Wile E. Coyote moment where you look down and you see a $500 gap under gold, and gold gaps down. We shall see.
Well, one thing that President Donald Trump has said a lot about in recent weeks, in his first weeks as president, is tariffs. And tariffs tend to be inflationary. So maybe there's some kind of reaction or relation there. In terms of, I want to sort of follow up on your sort of taking profits comment, but first I want to sort of put a bit more context on that. When I look at my screen, the vast majority of gold producers are trading at 52-week highs. So, is there an argument for taking profits at this time? We are in full year 2024 results season. Barrick Gold has reported, Agnico Eagle Mines reported last night, Kinross Gold reported. They're the main companies to have reported so far. Barrick reported a net profit of $2.1 billion, a 69% increase over 2023, although its gold production fell by 4% to 3.9 million ounces. Kinross saw its earnings surge 139% to $994 million on production of 2.1 million ounces, a little bit lower than last year. Agnico reported an all-in sustaining cost, a record all-in sustaining cost margin of $1,424 per ounce, but its net income fell slightly to $1.9 billion. Higher gold prices have seen all three companies enjoy margins of more than $1,000 per ounce, but their costs continue to go up. Barrick's all-in sustaining cost increased 11%, Kinross was up 5%, and Agnico was also up 5%. Chris, it's early days in the results season, but what do you make of things so far? Happy, sad, indifferent?
Why are they going up? Why are the costs going up? The fuel costs are not going up. We come back to the same thing. The mining industry has really sloppy management. Particularly when prices look good, they just sort of like let it rip. They're not exerting pressure on suppliers. They're not exerting pressure on themselves. It'd be quite interesting to see how much of the component of these all-in sustaining costs is related to GS&A rather than the gross margin at the mines. And certainly, bad practices of the past, like FIFO, fly in, fly out, have not gone away. And we thought that, when margins were getting tight a few years ago, that miners would move away from that and start building, permanent camps and stop doing this type of practice. But instead, they're sloppy at controlling their costs. 11% rise is way above what the inflation rate is out there, and it's definitely not fuel costs. So what is it?
Okay, now you mentioned a moment ago that what happens if the gold price has a correction. I think you said $400 or $500. You suggested it's perhaps a good time to take some profits there. What about with the gold miners? As I mentioned, many of them are trading at 52-week highs and doing very, very well. Is it a moment to take some profits there?
Yeah, well, the best way that they can protect themselves from profit takers is by paying a big dividend and bringing in more investors who are interested in more than just an arbitrage on the gold price, but are interested in making money out of these gold companies. And gold companies, particularly the Canadian variety, have been very stingy with dividends in the past. They just sort of think, just enjoy the ride. But enjoying the ride doesn't put money in the bank, and particularly if the gold price retreats and their profits retreat, you've had a boom period, but as a shareholder, if you haven't got any dividends and the stock price has retreated, you haven't made anything out of the move unless you take profits. And the insurance against that is to underpin the underpin the stock price by distributing as much of the profits as you can. So was it 2.9 million that you said that Barrick made? Why aren't they just how much?
2.9 billion.
2.9 billion. Why aren't they distributing 2.5 billion?
Well, Chris, I think that's a very interesting point. None of the three companies that I mentioned, Barrick, Agnico, or Kinross, none of them raised their dividend. Barrick continued with its 10 cents per share quarterly dividend, Kinross 3 cents per share, and Agnico with 40 cents per share. However, they are all increasing their returns to shareholders via share buybacks. None of them have talked about increasing.
That is directed towards getting up the stock price, which then feeds back to the executive options. Let's face it, basically executives are looking at their own option position before looking at the situation of the retail and institutional shareholders. And then they will complain, investors are not interested in our stock. Well, long-term investors are not going to invest in a stock that is just going up because of buybacks. I mean, what is the idea of that? That idea is basically to pump up the stock price, and becomes a bit of a self-fulfilling prophecy. And might say, "Oh, I've got a stock that's now worth more." There are people out there who will avoid these stocks because they're not making money on them. And the competition in the mining sector, it's quite interesting how they think that the competition for investor favor is the other gold mining stocks. No, the competition for investor favor is hotel stocks, insurance stocks, retailers, other people that are paying dividend, banks. When a pension fund wants to see how it's going to be paying out pensions in the future. It pays the pensions out of the returns on the shares, and the returns are, by that I mean the income off the shares, not by selling the shares. And, there's also a presumption from these stock buybacks that the shareholders have no capital gains tax liability, because you cannot take your advantage of a high stock price without generating a capital gains tax liability, unless you're some sort of exempt institution that doesn't have to pay cap gains.
Chris, it does make me smile when the gold companies, I read that they claim in their press releases they have attractive dividends. It sounds very naive, or it sounds as if they're in silos and not looking at other industrial or
Absolutely.
investment
They're
sectors.
not looking across the broad market. I do when I make my investments. If I can get 6% yield on something, 5% yield, and then I look at a gold stock and seeing a 1% yield, they're saying, "Oh, don't worry about that. The stock price is going up." But when the stock price stops going up, you're getting neither cap gains nor dividends, and it's like a double loser. Whereas, another type of stock, a bank might go down in price because the market goes down. You're still getting a decent dividend yield. In fact, the dividend yield goes up.
And the gold companies typically have a dividend yield in the 1% to 2%, and the better ones perhaps 3% or more. I did some research recently on Canadian oil and gas companies, and they have much more aggressive dividend policies. They have yields of 6, 7, 8, even 10%. It seems they generate a lot of money and they just shovel it straight out to their shareholders. You touched on this a moment ago. What would your capital allocation strategy be with this gold price bonanza if you were the CEO of these companies?
Oh, I'd be paying out 80% of their earnings as dividends.
Wow, that would be quite sort of transformational, I would imagine.
If they're paying out that amount of money and they're making that much money, if there's a new project that they want to do, why don't they borrow the money to do that project? Because if the project is not viable enough that it's worth borrowing the money at 6%, 8%, then the project probably isn't worth it. And we've seen bad capital allocation in the mining sector because the companies are so full of money at some stages, and they're also at such elevated valuations that they can afford to do deals that are dumb. And they repeatedly do deals that are dumb. Kinross was a byword 10 years ago for dumb deals.
I think that's a valid point, Chris. Last week, Grupo Mexico, the big Mexican copper producer, they raised $1 billion, 7-year bond. The coupon there is 5.6%. So cheap finance, or relatively cheap finance, is still available for the bigger blue chip names.
Yep, absolutely.
Well, let's stick with copper. McEwen Copper applied for admission for its Los Azules copper project in San Juan in Argentina, where you are, to the country's large investment incentive regime, which is called RIGI, which is a tax stability mechanism announced in 2024 by President Javier Milei to spur infrastructure development projects that have capital investments of $200 million and above. I believe it is the first miner to apply under the RIGI mechanism, and the company is looking at an initial capital investment estimated at $2.7 billion to build out Los Azules. A feasibility study there is due during the first half of this year. Chris, this would appear to be good news for Argentina, for copper, and for McEwen Mining. You spend a lot of time in Argentina. You're there now.
I would beg to differ. I've been a fan of McEwen Copper for a couple of years now. I've liked everything that they've done, but in this case, they're claiming that they're spending $227 million on a feasibility study. Now, the previous highest feasibility study, which I found eye-watering, that I've seen was $35 million. So how they're spending $227 million and not, in theory, producing anything more than a very large pile of paper for that amount of money is neither attractive to me, nor should it be attractive to investors, and certainly flies in the face of the goals of the RIGI regime, which is that the money that is going to be spent on building the mine. And in fact, at the end of the $227 million having been spent, you don't necessarily have anything but a pile of paper. And that is not the intention of rigging. That is gaming the rigging system, and quite possibly is going to produce blowback for the government in that large tax benefits will be gleaned, and then opposition and critics will be able to turn around and say, what have we got for our 227 million, or whatever the tax credits thereon were? So money that the government has, forsaken. And if there's nothing but a pile of paper, I can see why people would be very unhappy with that outcome.
Chris, is this a structural issue with the rigging mechanism? Because my understanding is the rigging mechanism exists for 2 years. And so anybody that does want to take advantage of that, obviously the government wants everybody to hurry up and invest. And so presumably that's the reason why they're given such a short window to be able to register. But that means for mining companies, for example, which do have long gestation periods, they've really got to accelerate things, or as you say, perhaps try and game the system a little bit to qualify under that.
Yeah, exactly. But you're not getting any real investment.
But presumably, if they are accepted, then they've got their toe under the rigging regime, and then the rest of that investment can follow. Obviously, no guarantee of that, of course, but it means they're in the game.
But then if they decide not to go ahead after the feasibility study because the copper price goes back to 320 or whatever, there is actually nothing left. There's no ongoing, because for 227 million you can build a mine in many places. So in this case, we're not getting anything. A lot of consultants are getting very well padded, but actual local workforce, well, there is no local workforce at Los Azules because it's in the middle of nowhere, but some people will be flown in or trucked in, and they'll do some drilling to produce the data that's going to go into this study. But there's no mine at the end of the road after you've spent that amount of money.
I am interviewing Rob McEwen, the CEO, chief shareholder of McEwen Copper, McEwen Mining next week, so I'll certainly ask him about this. I guess another interesting aspect there, Chris, is that McEwen Copper is still a private company. Obviously, it's looking at some point raising $2.5 billion to build the mine, potentially getting a partner in, obviously getting banks involved, etc. So, I guess let's play devil's advocate. To what extent or not does it need a 43101 compliant feasibility study?
Well, yeah, no, it'll need one, but does it need one that costs that much? They've been working away there for years. They've got a camp. They've done a lot of infrastructure already, roads and things. I've been there. But why do they need to spend that much money on a feasibility study? Very strange. But the other problem, of course, is that, long term, that McEwen Mining is, as a gold mining entity, is a bit second tier. It's a bit second tier. It doesn't really make much money or any money. And the real gem in McEwen Mining is McEwen Copper. But he doesn't want to set it free, because if he sets it free, then McEwen Mining will be seen for what it is, which is a couple of sort of second-tier gold mines, and people will flee. People are hanging in there at McEwen Mining for an eventual demerger, spin-out, whatever it's going to be. But we've been waiting a long time. There's no reason why it can't happen tomorrow, except that he doesn't want to see McEwen Mining reduced to really what would be sort of like a withered husk of the leftover assets. One of which is, just a half share in the San Jose mine down in Patagonia, which they own with Hochschild, and an asset or two in Nevada and Mexico. But really, McEwen Mining is sort of like not interesting without McEwen Copper. And so he keeps it embedded there. But now we've got this growing group of shareholders in this private company. You have Rio Tinto and others in there, Stellantis. So it has a shareholder base that's over and beyond McEwen Mining, but McEwen Mining still calls the shots. And unfortunately, is calling the wrong shots in leaving it as a trapped entity.
I think McEwen Mining owns about 46.4% of McEwen Copper. And yes, it would be potentially have a big impact on McEwen Mining's valuation as and when and if McEwen Copper is set free. Chris, let's broaden our conversation to copper in general. The copper price seems to slowly be starting to appreciate, hitting sort of $4.20 a pound earlier this week. As the copper price increases, do you think that will stimulate more activity in the copper space, or are copper miners still sort of ultra cautious?
No, it will. It will. No, it's long overdue. Copper, and the problem for copper is that too many people in the copper space hitched their bandwagon to the EV and the energy transition, train, which was really a train that ran off the tracks and crashed over the cliff. And finally, copper is broken free from the energy transition myth and is doing its own thing, which is a dynamic of lack of supply, lack of pipeline, not a demand-driven sort of fantasy of an EV in everyone's driveway, even for those people who do not have driveways. It just doesn't work out. So we've got copper actually breaking free from the miseries of the energy transition space, which unfortunately nickel has not been able to do, and neither has lithium or cobalt for that matter.
I think that's a very interesting perspective, Chris. Copper just getting on and doing what it has done for decades.
Yeah, it's responding to supply and demand. It's not responding to fantasies.
Excellent. Well, we have more to come, but first, a word about our sponsor, Revival Gold.
Revival Gold, ticker RVG on the TSXV and RVLGF on the OTCQX market, is one of the largest pure gold mine developers in the United States. The company is advancing engineering and economic studies on the Merkur Gold Project in Utah and mine permitting preparations and ongoing exploration at the Bear Track Arnett Gold Project located in Idaho. The company is financed and currently focused on the completion of a preliminary economic study on heap leach gold resources at Merkur and continued exploration along 5 kilometers of underexplored structure at the company's multi-million ounce orogenic gold system at Bear Track Arnett. For more information, please visit www.revival-gold.com.
Let's stick with copper as we get the second half underway, Chris. Freeport-McMoRan, the US copper producer, continues to invest in junior explorers, having entered into an earning agreement with C3 Metals for the Bellis Gate and Brownsville and Arthur Seat exploration licenses in Jamaica. It is also currently working with Max Resources in Cesar, Colombia, with ArcWest Exploration in the Golden Triangle of British Columbia in Canada, and Amark Resources, which at the start of the year announced the Aurora copper-gold-silver discovery at its Joy property in the Tuggeranong region of British Columbia. Chris, it seems face value very good that a copper major is sharing the love, investing in copper junior explorers. They've found it really hard, really difficult to raise equity finance to advance their projects. Are you a fan of majors investing to help copper juniors advance their projects?
Well, look, Freeport-McMoRan is a major, as you said. It's not in the top tier of majors like BHP and RTZ, but it's like the biggest mining company in the US. And these investments are puny. They're quite pathetic. They're nothing that moves the dial when one compares to its major mine being a Grasberg mine in Indonesia that's been going for decades and is enormous in copper and gold. While BHP is buying into Filo and San Jose in Argentina, big things, and there are big projects in Peru as well. Why is this company, with aspirations to stay as a major, buying into puny third-tier copper companies? Sorry to say it, Freeport-McMoRan is going in the wrong direction, and it's missing the woods for the trees.
What should it be investing in instead?
Peru and Argentina, even Chile. I mean, it should be investing in big things, not in, minnows.
Fair enough. Another group of companies, there's a handful of junior developers that have, let's say, medium size or projects with potential to be medium sized mines. I'm thinking of in Chile, for example, Marimaca, Los Andes, Hot Chili. They've advanced their projects. They're getting into permitting. They're, de-risking their projects, but they don't seem to be getting a lot of love or attention from the market or from the broader copper mining sphere. Why do you think that is?
Because companies like Freeport-McMoRan are chasing after mice, when there's much more bite-sized things out there that could potentially, move the dial for Freeport-McMoRan in the next 3 years, rather than ones that are going to move the dial in the next 15 years. It's almost like Freeport actually avoiding the issue of getting their hands dirty and adding substantial new pipeline. Instead, they're just fooling about.
Well, it does seem to be perhaps, I don't know, some people in the copper space perhaps have a lack of vision, or I don't know what the priorities are, but yeah. Okay, well, let's switch track a little bit. You mentioned energy transition, and you're glad that narrative is moving into the background for some of the big base metals like copper and nickel. But you do at Hallgarten, you do have a focus, I would say, on some of the specialty critical metals such as tungsten and antimony, for example. The past week or so, we saw shares in tungsten developer Almonte Industries up more than 100% after China restricted imports of tungsten. I interviewed CEO Louis Black for Kitco, which viewers can see on our YouTube channel. And it surprised me the interest that video drew for what is a relatively unknown company. We've got sort of 27,000 views to date on that. Tungsten is a metal used in munitions. Tungsten is trending. And it's not just tungsten. Financial institution RFC Ambrium issued a research report on antimony this week. Chris, you follow this space very, very closely. What do you make of this newfound interest in what historically have been niche metals?
Okay, well, first I'll say that about Almonte. That Almonte is a producer. It's the largest producer rather than a developer. It's the largest producer outside China of tungsten. And it's held that crown really for 10 years now. So if anything, it's been flying below the radar, and it's not its own fault that it's flying beneath the radar, because investors just did not care. And I can understand that, because until 2 years ago, the price of tungsten was like dead in the water. It's moved up a little bit, but tungsten has not moved up a lot price-wise, even now. And you've got to remember that the Chinese measures on tungsten last week in response to Trump were actually the second round. In the second half of last year, the Chinese already tightened the screws on tungsten exports, the dual-use tungsten, so as it's called. So dual-use being it's used for broad industry, but it's also used for military purposes. This is a new definition the Chinese have brought in, which they've used as well in gallium, germanium, and antimony to sort of retro-justify their export bans, because if they were just putting an export ban on a purely industrial metal that was sort of boring, and they had boring applications, then it wouldn't sound as good. So now they're making it all about the military aspect, and definitely tungsten is the premier military metal. It's absolutely vital for a modern military. and both as for armor-piercing shells and for armor plating of the vehicles that have to resist the armor-piercing shells. So absolutely vital. As it is, though, the numbers are very sort of woolly around how much of the global tungsten supply goes to military applications. But, ostensibly, if everyone looks at these pie charts that go around, it doesn't look like a lot goes to it. But particularly over the last 2 years in the Ukraine war, a lot of the stockpile of munitions of the US, the EU, and the Russians has been expended in that war, and that needs to be replaced. And that is a factor that people have not been considering. Also, the Chinese, in taking the dual-use function, maybe girding their loins, as they say, for some eventual sort of tussle over Taiwan. But as yet, the move in Almonte is a bit of a self-fulfilling move in that as the market cap goes up, the stock becomes more investable for particularly US investors who have a trigger. Now, Almonte for a long time was 100 million market cap, and that was just not investable for a lot of institutions. Its rise now is making that more so, and I think you will see Almonte being crowned as something like MP Materials in the rare earth space is crowned as being the rare earth play for US investors. That Almonte, which has actually announced in recent times a re-domiciling from Canada to the US, to Delaware, as a US entity, that tungsten is going to race away from the field, because even as it is, they are the largest producer outside China, and they're just about to get a lot bigger as they bring their Shandong mine in Korea online, which is going to make the gap between them and the also-rans much, much larger.
I recommend our viewers view that interview with Lewis there at Almonte. He goes into great detail about many of the things that Chris, that you've just mentioned. One of the things he said is China provides, I think he said 70-80% of world tungsten supply. And a key fact is that from 2026, he said US entities, US government agencies can no longer buy tungsten from China. They're banned by US government regulations from doing that. So developing new supplies, such as developing and expanding the production from South Korea that Almonte is doing, Shandong, is going to be a key thing there. So they really seem to have got their timing right in terms of the execution of their plan. As and when they re-domicile to the US, presumably that's going to be really a good benefit for them as well. Chris, what about on the antimony side of things? How do you react when you hear of a financial institution such as RFC, Ambrian, starting to put out research on antimony?
Yes, well, I can be tactful about that. I say it's good to see other people covering antimony. My perception, in fact, is that the antimony price will be going down, because while there are some sort of swiveled-eyed parties out there who are talking about $100,000 a ton for antimony, I see the Chinese not wanting that. The Chinese do not want to lose markets, and they saw back in 2014, when the price of antimony briefly touched 16,000, that that thrifting, which is where people reduce the amount of antimony in sort of usages, came into play, and the Chinese quickly shrunk the price of antimony back from 16,000 down to a low of nearly 5,000 a ton, where it spent several years, and they are not going to want to see their long-term long-term antimony market ruined by having excessive prices that have people switch out of antimony. Now, it's not that easy to switch out of antimony, because there are usages in fire retardants in particular that that you can't get away from, and antimony has many, many usages in the military space. So the Chinese don't have as much control over the antimony space as they used to, but they've really stopped and reduced their buying from artisanal miners around the world because they're not selling as much antimony themselves. And I see that the Chinese could make a big decision that they don't like the price of 40,000. And so I could see very easily the price going back to 26, which is an absolutely amazing price. People can produce antimony at 6,000 or 8,000 a ton. If they're selling at 26, they're making fortunes. The price of antimony does not need to be 40,000. And I see the Chinese coming along with their big mallet, as they've done in the lithium space and the rare earth space, and clocking antimony on the head. And it will be a severe shock for a lot of the wannabes who've moved into the antimony space, and they're entirely clueless about what the dynamics are. And I'm just waiting for the surprised look on their face when it goes back to 26,000. It's going to be quite fun.
Excellent. Well, Christopher Ecclestone, that has been very informative. A lot of food for thought today. Thank you very much for joining me today.
Great, thank you.
And if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.